All right, so we're looking at the solution to part B of our May 2020 question here on company accounts. Let me just get that share screen with the question. Right, so this is the question here. We was looking at it a while ago. This is Cacun Guest House, and we're in part B right now. So we're looking at the balance sheet actually, right? So just to take note of a couple of things here, we had some working now we need to do for. One sec. There was some working that we needed to do for the fixed assets part. I lost the question. I'm gonna get it back now. 1 second. Quickly. Bear with me. All right, this is what we're looking at here. So we had some depreciation to account for property and tools for last year, right? Mainly I'm talking about this here, depreciation here on property and tools for the year was 22,000. Now, while that would have been the figure in our profit and loss account, what we need to do actually is we need to add that to the provision for depreciation figure to date, right? Other than that, let's just quickly identify some of the other assets. Apart from the property and tools, we'll also be using stock of sheets here and towels as an asset. They ask us to depreciate for that as well, and depreciation for that was worded in is disguised a bit, right? That was the number 2 item here, right? Number 2 item. They ask us to assume that is replaced over 2 years before they are replaced. So it's used over a period of 2 years before they are replaced. This here. So that meant if it's used over a period of 2 years before they're replaced, the estimate or the useful life would be 2 years. The scrap value will be 0, right? So we did some working for that as well. So let's just go across to the to our solution. And here's our solution, right? So this was the property and tools I was telling you about. We have the at cost value here, 365,000, 131,500, right? That was the 22,000 for this year's depreciation, plus the existing balance that we had previously. Yeah. Next up, we had current assets of stock. This was the stock of breakfast items. There was also bank and petty cash, so that's our current assets. Now for the balance sheet for our company accounts, what we find is instead of working capital, they call it net current assets. It's found the same way. It's found by deducting current assets minus current liabilities. So I could actually just include that here. I could just put less current liabilities, yeah? Right, so current assets less my current liabilities is what gave me my net current asset figure, right? So I total all the current liabilities here, and let's just take a quick look at some of them, right? There was the creditors, 13,430. Debenture interest owing. They talk about debenture interest owing. I could just go quickly back to the question and we'd see where they were speaking about that. Right here, they said that debenture interest remains outstanding, right? How I calculated that debenture interest, what I needed to do was to find what the total value of the debenture was, right? There was 200 debentures, each worth $200. So that worked out to be $40,000. And then I needed to find 6% of that, right? 6% would be the interest that we're supposed to pay each year. When I did that, I should get a figure of $2,400. That will represent my debenture interest. And I did get that here, right? Debenture interest owing, right? $2,400. Dividends owing, right? Now they propose to pay dividends, but they have not paid these dividends as yet. The total dividends owing would have been 1,000 for preference shares and 50,000 for ordinary shares. And I could just go quickly back to the question and you should be able to see that as well. Right? The directors have recommended the following. So it has not been done. Full dividend on all preference shares and then 50% of the ordinary shares. Again, we would have done some working for this and we would have looked at that previously. But just to recap, we're looking at the total value of preference shares. There's 5,000 of them and they're each worth $2. So it's a total of $10,000 and the payment is 10% of that, which is 1,000. The total value of our ordinary shares is 100,000 shares at $1 each, which is 100,000. And the directors are proposing to pay 50% of that, which would work out to be $50,000. Yeah? So these were the things that they propose. And if I go back here to my answer, I have them listed here as current liabilities, right? Because they have not happened as yet. It's still to be paid. So the total of my current liabilities exceeded the amount of my current assets. That's fine. We got a negative value for our net current assets. That's okay as well. So I'm going to take that away from the total cost of my fixed assets, right? So 244,500 less 40,150 gives me this figure here for total assets, 204,350. From that, the next thing that we're going to look at is taking away our long-term liabilities. Right, our long-term liabilities here is the debentures, right, which we already calculated to be 40,000. So the top part of my balance sheet works out to be $164,350. The finance by section looks at two things mainly, three things actually. There's the share capital, which usually includes ordinary and preference shares. And there's also the reserves, which include a general reserve. And then there's the return earnings. And I have a little caption here. This figure was calculated from the profit and loss appropriation account. So that's the balancing or the end figure for our appropriation account is now used in the balance sheet. Share capital, we would have calculated that. I just spoke about that a little bit looking at the question. General reserves. Now you're seeing I have a figure here of 23,000. If you go back to the question, you'd realize that they said general reserve of 15,000, right? But there was previously a general reserve of $8,000, right? So $8,000 plus the 15,000 that they're proposing now will give me the total of 23,000. Yeah, let me just put this back in some brackets here so it doesn't confuse anyone. Right, so that's how I got the figure 23,000. All right, nice. So when I total these up here and I add my return earnings carry forward, you'd realize that I am at my balancing figure of 164,350. Right, that'll be the final figure to balance the account. Right, so just to recap, there's nothing very different about the balance sheet for company accounts. It's just shared by this finance by section. Capital is now listed by share capital reserves, and we usually add our retained earnings to this. Yes, share capital would be listed in the question. It will give you the total number of shares and the value for one share, right? We'd multiply to get the total value of all the shares, right? You see me listing it here, find the total value of that. Usually a company would have some reserves as well. This is for future planning or future investments. We will add that because that's a form of capital. And then there's a fragment of surplus or profits that has been undistributed or retained. So we add that to our capital as well. Yeah, just like how we would add net profit to our capital for sole traders. So this in summary is our balance sheet for this question. This question was May 2010. This was number 4, I believe. Let's just check quickly. Yeah, number 4, May 2010, page 6, section 2. Right, so that was the solution. I hope that was helpful. And we look at some more in the future.